What's up, everybody? This is Sunko, the Korean bro. Today is 2022, June 16. How long have you been? Let's go to Yahoo Finance. Right. Market beats. What interesting articles do we have tonight? Fed's aggressive rate hike raised likelihood of a recession. Home Depot may have value in the long term. And what else? A10 Networks key 5G infrastructure stock that's being the market. A game-changing deal for Blink Charging. Okay. Revlon files for bankruptcy protection and amid heavy debt load. Wix.com stock nearing a bottom week. Wix.com. Allstate a safe stock during volatile times, which will benefit from rising rates. Ford banks on EV development to boost share value. The institutions turned the tide for Jabil. Fewer Americans applied for jobless aid last week. A10 Networks key 5G infrastructure stock that's beating the market. Production at B-Devil baby formula factory holded by storm. A game-changing deal for Blink Charging. Plug your nose to buy Plug Power stock. 3 upgrades you need to pay attention to. Diversity with the core satellite investment approach. What to make of Tesla right now? Okay. Oh, we have upward trend. Interesting. U.S. jobless claims rise more than expected. Okay. Stock futures slide amid renewed recession concerns. Solution for gas prices probably a recession analyst. Load up, says Jim Cramer about these two high dividend stocks. The economy is going to collapse, says Wall Street veteran Novowitz. We're going to go into really fast recession. These are the 5 best stocks to buy and watch now. The Fed may need tougher medicine to tame inflation. Don't be duped by doomsayers, JP Morgan says. With remote workers ready to strike back, Kathy Wood's ARK investment says Zoom could skyrocket 1,227% by 2026. Stock market jumps even with expectations of large rate hike. This report suggests weakening economy. Goldman buyback that's was flooded with orders during stock rout. Where to invest your cash now? Now, even if you might need it soon. The stock market is not going to zero. How this individual investor with 70 years of experience is trading the bear market. Ethereum maximalist Mark Cuban says a crypto crash reminds him of Warren Buffett's advice. When the tide goes out, you get to see. Kathy were not overly concerned about inflation rates hammering ARK. Super rich people own just one asset that's not falling apart. Financial advisor on the market, don't think twice here if you are a long-term investor. JP Morgan makes 2 bottom-fishing bets for long-term gains. Stock market news live update. Stock futures slide amid renewed recession concerns. Too strong buy all stocks from one of the best analysts on Wall Street. With inflation at 40-year high, 5 financial pros share how to invest and save during times of inflation. Celsius is crashing crypto investors' spooked. Dream money and mistakes avoiding the bear market. Slides with Fed's hiking path soar in financial markets. Tiger Global partner behind big Carvana wager lives hash fund. Bond market losses just beginning as Fed sets path to 4% yields. 70% of economists on new polls say America is headed for recession 2023. Here's how Prostate approach investing. Buffett failing indicates Berkshire was a light buyer of its shares this quarter. Jim Cramer says boring stocks will outperform over the long term. Here are three names to consider. Tesla, Lucy, and NIO stock fall. Analysts are worried about EV sales. Bitcoin trash stopped the bleeding despite crypto scandals. Kroger stock slides as same store sales guide clouds earnings beat outlook boost. These non-funds can ease you back into growth stocks. Boeing gets us an upgrade. The analyst still doesn't look like the stock. JP Morgan packed its wealthy clients to the Tiger Global Fund for private bets. Alibaba stock is popular among bargain hunters now. In a tough Fed market, strategists finds opportunities. Knocking in a couple of this year's hottest sectors is AV stock a buy, as Humira biosimilar rivals Room. Wall Street sounded a louder recession call after the Fed rate high. Robble stock rise even as strong dollar curves booking. Top millennial Gen Z stock shift to energy plays. Popular peak Tesla appears to begin layoffs. Wall Street gets bearish on Coinbase. What the analysts are saying, these 12 stocks could be takeover targets in 2022. Oracle had a good quarter, but its problems are long term. Here's a trade. Unity Software stock initiated a sell. It was once a pandemic darling. Marvel and other cheap stocks are struggling. Two bulls turn neutral. YouTube Shorts claim 1.5 billion global users as TikTok rivalry hits up. PayPal launches a monthly buy now pay later option. Amazon sets Prime Day date, so it could be the catalyst the stock needs. How to trade a solid trading plan with a ladder grade system. Always 20 best open and mutual is Moderna stock a buy after FDA group endorses COVID shot for children. Qualcomm wins $1 billion. Appeal against EU fine for Apple chip contracts. U.S. jobless claims total higher than expected, 229,000 last week. Initial jobless claims ticked down last week, but were higher than forecast as investors monitor the labor market for potential signs of slowdown. First time fillings for unemployment insurance in the U.S. totaled 229,000 for the week ended June 11, falling from the prior week's upwardly revised 232,000. The Department of Labor said Thursday economists surveyed by Bloomberg had expected the latest reading to come in at 217,000. Last week's figure held near the highest level since mid-January, when the Omicron-driven wave of COVID-19 sent droves of employees home from work. Still, the number of claims reflects a labor market that remains hot, even as tighter monetary conditions and persistent inflation raise worries that unemployment may spike. Jobless claims total higher than expected, 229,000 last week. The economy is going to collapse. There's Wall Street veteran Novogratz. We're going to go into really fast recession. Veteran investor and Bitcoin bull Michael Novogratz's economic outlook is not rosy. These are the 5 best stocks to buy and watch now. What are the 5 best stocks to have and watch now? Buying stock is easy, but buying okay. The Fed may need tougher measures to tame inflation. The Federal Reserve just hiked its key interest rate by the most since 1994. They may not be enough to bring inflation down from its worst level since the 1970s. And indeed, after lifting the Fed funds rate by 3/4 of a point, the Fed continues to project a remarkably benign outlook, with mildly restrictive monetary policy bringing inflation back down to 2% range next year, even as the labor market remains close to full employment. With remote workers ready to strike back, Kathy Wood's art invests that Zoom could skyrocket 1,227% by 2026. Zoom video was one of the hottest stocks during the early days of the pandemic, but not anymore. Shares have plunged 38% year to date. Over the last 12 months, they're down a painful 68%. But Kathy Wood's art invest sees a glorious revival in a not too distant future. According to Art's open source research and model, Zoom's share price could approach $1,500, compounding at a 76% annual growth rate in 2026. Wood's team wrote in a research report last week, considering that Zoom shares trade at $113 a piece right now, the projection implies a potential upside of 1,227%. Bill Gates says crypto and NFTs are a fool's game. Mm. When meetings and classes moved online due to the pandemic, Zoom's business flourished. But as the economy reopened and employees started going back to the office, there have been concerns about the growth potential of this video communications company. Art Invest, however, doesn't see the hybrid work environment going away. Although a perceived decline, the severity of COVID 19 influenced many firms reopen offices and reinstate 100% in office mandates, which lowered the penetration of hybrid remote working models to 66%. We believe that knowledge worker backlash and talent shortages will compel employers to adopt more flexible arrangements. Our Invest predicts that by 2026, 75% of all global knowledge workers will participate in hybrid remote working models, up from 51% in 2021. As one of the leading providers of video communication software, Zoom is solidly positioned for this trend. Our investment projections suggest that the number of Zoom users will grow at a compound annual rate of 7%, from 212 million to 291 million by 2026. At the same time, the firm sees substantial improvement in Zoom's ability to monetize its user base. Mm. Our mean projection assumes that the majority of Zoom's users are enterprise customers, and that 50% of the total Zoom user base is paying by 2026. That $1,500 figure is the expected value of Zoom stock based on ARC simulations, but it's not the only number worth noting. ARC Invest also provided bull and bear scenarios for the company. Based on Art's Monte Carlo analysis, there is a 25% probability that Zoom could be worth $700 per share or less than, and a 25% probability that it could be worth $2,000 per share or more in 2026. Considering where Zoom shares are trading at right now, even the bearish scenario implies plenty of upside ahead. Considering where Zoom shares are trading in right now, even the bearish scenario implies plenty of upside ahead. Hmm. Not the only bull on street. Our invest bullish call on Zoom is reflected in its holdings. At the time of this writing, Zoom is the largest holding Arch flagship fund or innovation ETF, accounting for 10% of the fund's weight. It also the number one holding Art next generation internet ETF with an 8.7% weighting. But Art Invest isn't the only firm that sees potential in the company. Last month, Morgan Stanley analyst Meta Marshall reiterated an overweight rating on Zoom, saying that Zoom is a name where investors need to search hard for a reason to not own it. Hmm. Marshall's price target of $140 is about 24% above where the stock sits today. Meanwhile, RBC Capital Markets analyst Rashid Jarrah has an outperform rating on Zoom and a price target of $150. A stock market jumps even when expectations of large rate hike. Hmm. This report suggests weakening economy. Hmm. Stock market indexes climbed more than 1% Wednesday morning. Their best gains in nearly 2 weeks, as investors waited for the Fed to announce its interest rate policy. The indexes are rebounding from a wave of panic selling. The Nasdaq Composite jumped 1.7%, and the S&P 500 1.5%. Small caps also participated, with the Russell 2000 up 1.2%. Um, okay, the Federal Reserve concludes its meeting today at 2 p.m. ET. Um, with a decision on interest rates. Most market participants expect the Fed to lift the Fed funds rate by 3/4 of a point, which will be the largest since 1994. Futures markets are indicated a half point hike until Friday's hotter than expected consumer inflation report changed the rate outlook. With today's rate increase almost a foregone conclusion, the stock market will be watching Fed Chairman Jerome Powell's comments on what's next. Could there be additional 75 basis points hikes? As the Fed meets this morning, the U.S. Census Bureau reported that retail sales fell 0.3% in May. Where the investor cash now, even if you might need it soon? Inflation is stubbornly high, and interest rates on savings accounts aren't anywhere close to keeping pace. Okay. While the yield on a 2-year treasury is now 3.28%, up from just 0.17% a year ago, the average savings account is barely in positive territory at just 0.07%, according to personal finance website Bankrate. For investors hanging on to cash, whether for emergency savings or other uses, it's a frustrating situation. The annual inflation rate, as measured by the Consumer Price Index, is up to 8.6%, which means the purchasing we're not overly concerned about inflation rates hammering ARK. Noted tech investor Kathy was staying true to her investing style. Bold bets on buzzy future leaders despite seeing her funds hammered during the plunge into bear territory for stock markets amid inflation worries and rising interest rates. We're not overly concerned because we're already seeing signs of inflationary pressures beginning to ease, Wu said in a new interview with Goldman Sachs. We have long believed that the current inflation surge is a one-time shock to the system, although it has lasted a lot longer than initially expected, pointing to declining global shipping rates and likely discounting at retailers due to high inventories. Wood reiterated that inflationary pressures have begun to unravel. Mm. I do think we are on the other side of the inflation problem, was said, later adding that I think the rate market is telling us the inflation will eventually come down to levels consistent with positive real growth. And have been surprised that more investors don't seem more reassured by this. Mm. Investors haven't been reassured about much of anything lately. All three major equity indices reversed positive starts on Tuesday, traded in the red most of the day, and closed mixed as investors prepare for a potentially extra hawkish Fed meetings Wednesday. U.S. stocks sank into a bear market on Monday. Coinbase shares are down 80% year to date amid a new crypto winter that has forced the company to slow its growth. On Tuesday, the company announced an 18% reduction in its workforce. Shaken investor, however, ah, hi mo, nyang nyang, nyang nyang. And many people have denigrated our strategy as profitless tech, concept capital, or tech wreck. Ah. Terms you didn't hear during the tech bubble, she told Goldman. That's a beautiful thing in some ways because it means that a lot of negative news is already priced in. Yet, despite that pessimism, 2022 to 2024 consensus estimates of revenue growth for our portfolios are in the 25 to 27% range. If this were a replay of the tech bubble, our portfolios would be showing negative expected revenue growth. Okay, uh okay, let's look at what Wu says. It's really important because she's like the one of the leaders that I follow. Mm. So the consensus estimate for the gross margins of our companies, which we believe provide a sense of the underlying profitability of our companies, or has them moving up slightly, whereas margins were moving down at this point in the tech burst. Despite these differences, investors still running for the hills toward their benchmarks. A decision we think will prove to be as wrong as racing toward the dream was during the dot-com bubble. And not really mm, not the kind of article that I was expecting. I was expecting to gain more of a knowledge side article, but it's pretty much about the fact that she doesn't worry about its price going down. Mm. Super rich people own just one asset that's not falling apart. Okay, let's see. Mm. The number of multimillionaires around the world continues to grow, but this year's uh, raging market may put a halt to that as they're loaded up with assets plummeting in value. Millionaires invested more than three quarters of their money in stock, bonds, real estate, and alternative investments, as the just released World Wealth Report from Capgemini Research Institute. All four of these asset types are down on average of more than 15% over the past year. The only asset not falling apart, cash and equivalent, is only a 24% weight in multimillionaires' portfolio. That's down from 27% 3 years ago. Having a great time to be a Miller until January. Then got total stop market. Um, and financial advisor on the market. Don't think twice here if you're a long-term investor. The S&P 500 plunged into a bear market early this week for the first time since March 2020, sending many investors into a TZ. According to one financial advisor, however, the sell-off could present a buying opportunity, particularly in bank energy stocks and companies like Verizon. I think any of those old school value names right now are great to have in your portfolio. Payne Capital Management, Prison, Ryan Payne said on Yahoo Finance Live. And don't think twice here if you're a long term investor. Hmm. Okay. The market has been on a steady decline since the beginning of the year, hammered by inflation and effects of the ongoing war between Russia and Ukraine. May's consumer price index data showed inflation has now reached a 40-year high at 8.6%, one day before the national average for a gallon of regular gas topped $5 a gallon. I think you buy with impunity here, Payne said. As a long-term investor, you buy when there's a blood in the streets. You buy when there's a blood in the streets. There's blood in the streets right now, and it's kind of like revenge of the nerds. Mm. Value stocks, he said, have held up way better. Mm. These include companies like Verizon, along with Citigroup, General Motors, and AT&T, which is the only stock among those listed that's up year to date. Mm. If you look at a portfolio of value stocks, it's down less than 10% this year, Payne said. The only bear market you're seeing right now is in growth. Okay? Mm. Disruptive technology and Bitcoin. But the reality of it is if you take tech out of the S&P 500, you're trading at 14 times forward earnings. That's so cheap. That's been as cheap as it's been in years. I think you have a gift from the gods here as a long-term investor to buy. If you look at the portfolio value, it's down less than 10%. It's down less than 10% this year. The only bear market you're seeing right now is in growth, disruptive technology, and Bitcoin. But the reality of it is, if you take tech out of the S&P 500, you're trading at 14 times forward earnings. The markets have already priced in recession, whenever that may be. Most of the damage is done here, Payne said. You may get some more selling on the downside, but at this point, how much are you going to get? The damage has been done at this point. You can't buy anywhere in here as a long-term investor unless you need the ill to launch today. JP Morgan makes two bottom fishing bets for long-term gains. We'll start with take to a company in the online gaming industry sector whose value is estimated mm, near $200 billion this year. Take Two Interactive. Take Two Interactive. Okay. Take Two, through its subsidiaries, owns several high-profile game franchises, including the Civilization series and long-running Grand Theft Auto. The company's gaming products are available in both desktop and mobile versions. In January of this year, Take Two made a major move to expand its mobile offerings. through the purchase of the mobile and social game company Zynga. The acquisition was approved by shareholders in May, and that month the transaction was completed. And also last month, Take-Two reported its results for quarter four in fiscal year 2022, which ended on March 31st. The company showed a quarterly revenue gain of 11% year over year, as its top line rose from $839 million to $930 million. Earnings for the quarter were down from the prior year, falling from $1.88 per diluted share to $0.95. Quarterly net bookings, a forward-looking metric, were up 8% to $845 million. For the full year, Take-Two's top line was up 4% by GAAP measures. Next up on our list of JPM picks is Bausch Health, the modern incarnation of Valiant, a long-standing name in the pharmaceutical industry. Too strong by old stocks from one of the best analysts on Wall Street. As we approach mid-year, it is time to take stock of the oil market. Prices are up near $119 per barrel of crude oil right now. Indications are that they'll keep going up. Industry experts are predicting a rise to $150 per barrel, but in quiet tones and small print, they're indicating chances for $175 or even $180 by year's end, with high prices continuing into the next year. If they're right, that markets generally are in for shock oil, and energy generally are upstream of everything else. What happens to oil and its refined fuels will trickle down through almost the entire economy. As the price of crude goes up, as demand increases, and as refining capacity remains static, the conditions are set for record high prices in petroleum and its refined fuels. Marathon Oil Corporation. The first oil stock we're looking at is Marathon Oil Corporation. The exploration and production spin-off from Marathon Petroleum. Marathon Oil has been operating independently for the past 11 years and focuses operation in several of the country's best-known oil-producing regions, including the Eagle Ford Shale sales in Texas. Pioneer Natural Resources. Next up is the Pioneer Natural Resources, another hydrocarbon company wanting to exploit the Texas oil fields. With inflation at a 40-year high, Financial Pro shares how to invest and save during times of inflation. There's just so much to read. Okay, the Federal Reserve just approved its large rate hike in almost 3 days, signaling that it wants to get high inflation under control. Okay. Invest smartly in your employer-sponsored retirement plan and a brokerage account. Investing is the key to beating inflation. For example, the average annualized return of the S&P. Treasury inflation protection securities are government bonds that help protect you from inflation. Weight, real estate, and commodities. Grace Jog, certified financial planner and Midtown Financial Group, tells MarketWatch Peaks that tangible assets such as real estate or commodities are also something to consider during times of inflation. Think about value stocks in the consumer staples arena. Look for tax efficiency. Look at companies that can raise prices relatively easily without harming the business. Don't keep an excess of cash on hand. That's that. Don't neglect your savings. 70% of economists in the new poll say America is headed for a recession in 2023. Here's how Prowl says to approach investing in light of that. Many economists say the United States will fall into recession next year, according to a new poll by the Financial Times and the University of Chicago's Booth School of Business. Indeed, 70% of the 49 economists polled said they thought would declare a recession in 2023. Of course, whether or not those concerns prove to be correct remains to be seen. Hmm. Uh, but if you want to prepare for that possibility, here's what the pros say to do. Mm. Don't derail your long-term plans because of fear. Okay, but if you are really nervous, consider going to a little more conservative. Okay, and what else? Buy stocks at lower prices with any extra funds you have. Okay, that's it. Okay, it's what everybody knows. Oh, Gene Kramer says boring stocks will outperform over the long term. Boring stock. Here are three names to consider. Boring stock. We'll start with the risk management, a fancy way of saying insurance accounts. It's official after this past Monday trading S&P 500 has joined the Nasdaq in the bear market. The index is falling more than energy rate. The well-known host sim program has never been at a loss for advice to give, and he's come true once again. He was worried for a stock investor. Now, keep it boring. Keep it boring. By boring, Kramer means avoid stocks with high volatility. That will be the key in his view to survive in the coming months of high inflation in a bear market. If you bought common stocks or companies that make real things and do real things, return capital and trade at a reasonable valuation, you're relatively fine. The problem is those stocks that go down less. They're really, really boring, Kramer opined. CenterPoint Energy. For the second step, we'll shift our view to a Houston-based utility company. CenterPoint Energy operates in electricity generation and transmission and natural gas distribution. Public service enterprise group. Everyone needs power and cooking gas, so the utility companies always have a market. Based in New Jersey, the public service enterprise group is a provider of natural gas and electric power services to customers in the greater metropolitan New York City area, including parts of Long Island, New Jersey. Boeing gets an upgrade, the analyst still doesn't like the stock. Uh, Boeing stock was upgraded to buy on Thursday, but the shares were trending lower in pre-market trading as the analyst also trimmed his price target. And said he still preferred rival Airbus. City analyst Charles Amitaji raised his rating on Boeing to buy from neutral, saying he saw a couple of near-term catalysts that could help the stock deliver significant value to investors. The catalysts include the resumption of 787 model deliveries and the return to service of the 737 MAX model in China as COVID restrictions, blah, blah, blah. Alibaba stock is popular among bargain hunters now. When discussions turn to China, one question that always pops up from US investors is it safe yet to buy Alibaba Group Holding, the e-commerce juggernaut that has been battered over the past 2 years amid the country's crackdown on technology. Alibaba stock fell 7.4%, 74% from its peak in fall 2020 to its low in March, and shares are still down 10% this year. Next, there's a lot to read, okay? So I have to read it really briefly. Otherwise, I won't be able to go through all of them. Okay. Is AV stock buys Humira biosimilar rivals loom? AV has fallen off its early April high after the big pharmas that will announce the departure of President Vice Chairman Marcus Aurelio. 8 years and headed to flagship pioneering tech creator behind Moderna. Oracle had a good quarter, but its problems long term. Here's your trade. Initiated sell. It was once a pandemic darling. A bit more, a bit faster. Shares of Unity Software were falling in pre-market Thursday after an analyst at Benchmark initiated coverage on the stock SL, saying that market conditions will shift investor interest elsewhere. Mike Hickey initiated coverage of Unity SL with a $27 price target. The research note Hickey said he suspects that sustained economic madness, post-pandemic normalization on player engagement and user acquisition and rationalized spend scenarios could be a challenging environment for Unity's growth profile. YouTube Shorts claims 1.5 billion as TikTok rival hits up. Google stock gained parent Alphabet on Wednesday said its YouTube Shorts, a short form video rival to TikTok, now has 1.5 billion monthly logged in users globally. Google stock rose on the news at the Nasdaq Composite also gained. At 1.5 billion monthly users, YouTube Shorts will surpass the most recent numbers released by TikTok. In September, TikTok said its app had more than 1 billion monthly active users. Amid growing competition with TikTok, Google has been disclosing more metrics from YouTube Shorts. On its first quarter earnings call, Google said YouTube Shorts had more than 30 billion views per day, 4 times more views than a year earlier. How execute a solid trading plan with a letter grade system. Okay, I'm getting really sleepy, so changing there for blink charging. Okay, I'll be sleeping on some articles. I think are not that really important, so I'm just gonna go skip it. Instead, I'll be reading articles about this one, traded stocks. Okay, this is it for today, and I'll see you guys tomorrow. Okay, bye bye.